Let's talk taxes. I've had several conversations in the last week about how the difference in tax rate between subdivisions impacts your monthly payment. So, you know what time it is. It's math time. I thought doing a whiteboard video would probably be the best way to show this and give an example of how this actually impacts your monthly payment. So we're going to use a sales price of $350,000. And then we're going to assume a 5% down payment. So we're going to do 5% down payment. So that's going to leave you with a loan amount, I'm abbreviating everything, of $332,500. Now this is really important that we talk about the difference in this because your payment is based off of this, the $332,500, but your taxes and your insurance are based off of this, off of the sales price. So let's look at this. And we're gonna do 4 different tax rates. We're gonna do a 2% tax rate, we're gonna do a 2.5% tax rate, we're gonna do a 3% tax rate, and we're gonna do a 3.5% tax rate. And in the Houston area, there are tax rates going all the way from 1.8 all the way up to 3.9%. So this is very doable. This is something that we see all the time, different tax rates between subdivisions. This is your property tax, your MUD, your city, your county, school, all of those taxes are rolled up into this percentage. It's a total percentage of the property taxes on the home. And what it's valued at, in this case, we're going to use the $350,000. Taxes and insurance are always based off of the value or the sales price, and then the rest of the loan payment and the mortgage insurance is based off of the loan amount. We're going to assume a 7.25% interest rate. So here, your principal and interest all the way across the board. I wrote that down. $2,268. This is your principal and interest. I don't know if you guys can see that way over here. PI means principal and interest. Next, we're going to add insurance. So your insurance, right, INS right there. Insurance, let's say insurance is $290 a month. Next, we're gonna go with mortgage insurance. Mortgage insurance, that's gonna be another video, but in this case, it'd be about $180 a month. So I'm gonna write MI over here, 180. Now we're gonna get into the tax part. For this first one, at 2%, the taxes would be about 583. 350,000 times 2%, divide that number by 12, $583 a month. So in this scenario, your monthly payment is going to be $3,321. Okay? Now we're going to go to the 2.5. So this subdivision has a tax rate of 2.5%. So here, that's $729 a month. So that's going to give you a total payment of $3,467. $3,321, $3,467. It's not that big of a difference. 2.5 to 2% tax rate. Now we're going to go up to a 3% tax rate. And those taxes would be $875. So you're going to end up with a total payment of $3,613. Then finally, we're going to go all the way up to the 3.5. So those taxes would be $1,020. So this payment is going to be $3,758. So let's look at the difference here. You've got 2% tax rate. This house is going to cost you $33.21 a month. 2.5, this house is going to cost you $3,467 a month. This one, $3,613 a month. And let's turn just a little bit. This one, $3,758. So what is the difference between these two tax rates? It's $437. Now, I don't know about you, but that's like a little car payment. So you can have this $350,000 house in this subdivision with a car, and you can have this $350,000 house in this subdivision and just have a house, have no car. I am not saying that subdivisions with higher tax rates are not good. But what I am saying is that people get really caught up in looking for the price of the home, and they don't think to shop the actual tax rate. So just keep this in mind. If you find a subdivision that you love and the tax rate is 3.8 and it makes sense for your budget, buy it. But you may want to look around and check to see if there are some subdivisions that have a lower tax rate. So if you want to know more about how property taxes impact your monthly house payment, let's chat.